Good afternoon, folks. Tommy O'Brien coming to you live from TFNN. Thanks for kicking off your Friday afternoon, final hour of the trading week, right here with me on the Tom O'Brien Show. And we got quite a two-way market right now. S&Ps, we're right back to where we were this morning, folks. Well, guess what? That's a solid 1% down and 1% up. Two-way action in this market, quite the volatility, and we have an S&P, right, as I mentioned, near the open. We're positive by 0.5%, up 37 points, trading at 75.10. NASDAQ 100, you got Amazon soaring higher, Apple pulling back, in quite a pullback for Apple. 9%, you were down to 300. Folks, if you haven't checked out Basil Chapman's opening call, it's right on the front page of TFNN. He just did a webinar this week, live for subscribers, 90-minute webinar. Okay, you gain access to that as a subscriber, and I mention it because how's that for a nice round number? There it is, folks, the opening call. What technicals to look for, what stocks and ETFs will benefit in the second half of this year. You can sign up for the opening call. You get a 30-day money-back guarantee, and I thought of Basil today. Doesn't get much more round than that. 300 on the dot, Apple, for a low on the day, but still down 9% for Apple shares. Quite a pullback. On the flip side of that, Amazon up 15.2%. These numbers, man, okay? Video game style numbers. You're talking about Amazon. Yeah, approximately 10 billion shares. Man, this is wild, right? So yesterday you had Microsoft make nearly 500 billion in market cap appreciation. Today you're going to have Amazon make 360 to 370, big numbers, man. Yeah, almost 11 billion, 390, somewhere between 360 to 390 billion in market capitalization increase for Amazon. And on the flip side of that, you have Apple down $29. And you got 14, almost 15 billion shares outstanding for them. So they're going to lose 450 billion in market cap. I was making the case this morning, folks. You know, the administration's making the case that there's too much public sharing of information when companies have to report earnings every 90 days. This earnings cycle with these big spenders, right? The fact that they're all jumping around $300 to $500 billion on what happened in the last 90 days, it is remarkable. Not even to mention what's happening with the chip stocks, right? SanDisk goes from 970 to 1400, but that's a story of leverage, and we'll get into that one. All right, we jump over to crude. We hit a high of nearly $86 on the session. We're trading right now at $84.66. The story of the day, though, folks, is yields and what's happening with the dollar. The two of them combined. We got the 10-year right now at 4.75%, folks. Right? That's 3/4 point hikes since the war began with Iran. That's it. It's simple math. The 10-year was at 4% coming into the war. There it is, folks. Okay? And, remarkably, you're down from 114 to a 107 handle in about 5 months. And we now have the 10-year at 4.75. And we just broke the lows in terms of price action that we had said earlier. And on a longer-term basis, right, this is kind of the area that we've been down to on many occasions on the 10-year. We're at 4.75 right now. We'll see if it wants to make a run for 5%. Now, what's interesting, though, is that no one wants the dollar as yields are rising. Yeah, right? So at the same time, and you talk about the lack of correlation, you have yields spiking higher and the dollar selling off. And that's what's been happening since the Fed decision. So there's a real chance here that you have a dislocation in that market even with higher yields in the U.S., the market's worried about the strength of the dollar. Now, gold's not quite sure what to do, right? Because in any other scenario, you have spiking yields, you have dollar strengthening, and you have gold pulling back, and that's the run. We had $100 from high to low from last night, okay? And then you have a slight bounce, but all things considered, sitting at 4103. Yeah, you're talking about quite a number to be holding up as we have the 10-year approaching 4.75. There's some strength in that number. There really is, because yields are on fire. You got silver right now down 92 pennies, down 1.5%. You jump over to the dollar yen. Okay, you look at the moves. Another move at 120 where you drive down over a full point. And so you have intervention going on in Japan. All right, now that's a weekly. All right, it's a little bit clearer when you put it on a daily, how you get 1, 2, 3 moves. The reverberation has been pretty quick, as in when they've stepped in previously, folks, okay, and this is strengthening of the yen and weakening of the dollar. When they've stepped in previously, you're talking about a matter of days until you snap back. So we'll see how the market reacts this time. You're at 158.95. That's the weakest the yen has been in 40 years before we just strengthened there. 40 years, 1986, folks. And it's still not too late. You want to go vacation in Japan? Okay, lock in some yen, because risk-reward-wise, you can't go wrong. Yes, it can weaken further. Okay, you better believe it can, man, right? Don't think it can't go to 200 or something, okay? Look at this no man's land we're in, right? Now you got levels out here of 200. That was the last. Technically, that's your area, right? But getting 160 yen for $1 US, folks, when in 2021 you were almost at just getting 100 yen, you're getting 60% more buying power in Japan right now than you were at the beginning of 2021 for your US dollar. 60%. Yeah, and there's more going on than that in terms of what's priced what, but that's the basics, man. And that is the strength of, having a strong currency. Yeah, when we have a very strong currency, right, it's tough to sell other countries our goods. When we want to get paid in our very strong currency, it hurts exports, right? We want a weak currency, we can sell everybody our stuff, the president, okay? But on a longer-term basis, you want your currency strong, and you see it play out when you do dealings on a global basis. Now, that can go to an extreme as well. But, this move right now with no one buying the dollar and no one buying yields. Both of them, right? They're selling the 10-year, which is forcing yields higher, and still the dollar's selling off right now. On the heels of what happened Wednesday, we got a little bit of a trend starting this week. We got markets in the green. We're coming right back, folks.